What's up, everyone? Sorry, the sound wasn't on, not the right one. How you doing? Guys, please let me know if you can hear me, if you can see me, if everything is working okay. I'm not gonna do another stream talking 20 minutes to myself like last week. Auka, I'm sorry to disappoint you, man. It's just my own scary face. Nothing special. Pumpkin, man, I wish, guys, I really let you guys down. I didn't even know it was Halloween until 30 minutes ago. Yeah, I'm sorry, man. It is what it is, guys. I should have done better. I'll mark it down for next year. Last Saturday, I went to a Halloween party though, and I was dressed up as my friend. It's also not that scary. All right, everyone can hear me. Good. No recap of last week. So let's dive into the charts. First, I want to talk a little bit about what to expect, or what's statistically most likely. We're going to look into that. Then we are also going to discuss a little bit my findings on, you guys know I've been doing a lot of research towards sessions and mostly the interdependence of sessions. And let me see. Oh, okay. I was at least expecting a face mask with the MTF page printed on. There you go. That would have been a good one. Such man. Hey, Elena, what's up? Such, I need to get you, I really need to get you that Minoma merch. Flying all over the world with Minoma merch would be pretty hilarious, not gonna lie. All right, so but I also have been doing a lot of research towards interdependence of sessions, and I'm gonna talk a little bit about what I found, or more what I did not found, which is also important, and some interesting takeaways from it. All right. So first of all, we have weekly P1 on Monday, weekly P2 on Tuesday. We already know what that means, right? Monday is strong AF. Weekly P2 on Tuesday is obviously less strong. And we've had this, beautiful grind up towards this high. And you probably already know that my thinking is we need to see higher prices this week. We're gonna get into that. One interesting thing, actually, what I really want to get the statistics on is how long impulses usually last. So, if we, for example, because you can see patterns in there, the only difficulty in finding them or gathering statistics of it is that I will have to somehow find out a way, which I will, to mark out. For example, this is a swing low, this is a swing high. We can see that with the naked eye, and I'll try doing like marking, labeling that in the data. You need some kind of algorithm for that. But if you, for example, look there, you had a 124 bar for 4 hour candles up to the high, followed by 79 down to the low. And this is just me freewheeling some analysis. What you always see in uptrend is that the up impulsors are, if you count them like this, then the impulses up are longer than the retraces down. So for example, here you have on the 24 bars up, followed by 79 bars down, 62 bars up, followed by 17 bars down, even less because I see I don't have the top nailed. 16 bars down, right? So the retraces down are usually lower. And in this case, I'm obviously counting from low to high, high to low, which is easiest. So, then we can do the same thing and say, okay, how long? So what I want to do is get statistics on all of these and then kind of see how long these usually last, because there's definitely patterns in it. The best pattern I found is on the high time frame. But so for now, we can see that this one is 36 bars compared to the 124 and 62. Would it, did this halving of this, a literal halving, and then this would almost be a halving. I don't think it will halve 2 times in a row, if I'm being honest. What I personally think is going to happen is that the high has not been found yet, and our statistics are supporting that idea. And why I'm saying that is that usually you see these up impulses lasting more or less equal time. I will go into that a little bit later on. But I mean, it doesn't mean this cannot be the high. But what we also have, statistically speaking, is that, and let me check the weekly stats for that. You've probably already seen it. I think I have only Bitcoin and Ethereum selected right now. Is right here. We have 8.6% P1s with bigger distance on Bitcoin and 76.7% chance for the amount of weeks with more distance. So we have, let me just, besides the fact that, this seems like it needs to last a little longer, in my opinion, to find high, is that is. We also have, more or less 8% probability of taking out the low purely based on distance perspective. And then we also have the Monday as the low and Tuesday as the high, which is always great because, as I mentioned before, many, many times, Monday is not to be fucked with. I mean, look at those Mondays. Once again, you can see here Mondays, a lot of P1s on Mondays. So we have that P1 on Monday, P2 on Tuesday. Besides that, we have that distance statistics backing us up, where it says, okay, 76% of weeks see a 30 displacement. And last week we had a very improbable week with it was so contracted that doesn't happen a lot. So the question is, would it happen twice in a row that you have a very limited contracting week? I mean, it's possible, but unlikely, I would say. Although it's a gambler's fallacy to think last week is connected to this week, which is something I'm gonna, or that it's not a gambler's fallacy, but it is a fallacy in thinking. I don't think that's the case in markets. We'll get into that a little bit more. But so, you also have this Tuesday now as the weekly P2. Doesn't have a lot of chance of being in P1. So time adjusted, 71% chance of holding Monday, 18% chance of holding Tuesday. And it has been 23 weeks since it has been P2. So if Monday low holds, all the signs seem to be very much set on green to take out that weekly high on that Tuesday. Interesting thing to think about is what is the rest doing. ETH is looking pretty decent because ETH has even better statistics, right, than P2 on Monday even. But I'm looking, yeah, so the other assets, and this is obviously, you see Bitcoin dominance is increasing. So you see that these assets are holding a lot less well. You see a lot bigger retracements on the other asset, but there are definitely some interesting ones that we can look into. Some really interesting ones, actually. Because these are all have great stats for bullish continuation, and you have quite some retracements on the weekly. The only danger with alts at this point is obviously that if Bitcoin dumps, and I do think it needs to dump a little bit more, so I wouldn't personally look for an entry now on these alts. But if Bitcoin dumps, because relatively Bitcoin is so much stronger, Bitcoin could dump to here, keep the weekly low intact, while alts take out their weekly lows. So that's something to keep in mind. It's actually very similar to a situation we had 2 weeks ago, I believe, where also Bitcoin kept on very high, relatively retracement, and altcoins were retracing much deeper. But we did get some really nice entries then on the Friday. The moves seem to be happening on the Friday. I don't know if you noticed, but all the Friday afternoon seem to have quite a bit of moves. What I'm actually going to include in the dashboard is a volume tracker that we can track when volume enters the market over time. So, for example, it would be easy for us to spot if there is indeed an uptake on Fridays, increasing volume. Because I shared the statistics with you, I think, and you can really see pretty much a one-on-one correlation between how much volume there is in the market and how big of a move there is for that given day, hour, session, whatever. It's pretty much identical, right? Which means that volume equals volatility. So what I'm going to do is actually create a volume tracker over, you could check which hours of the day, which days of the week have the volume impulses. And that in recent days, my idea is to have a chart where you can see how it changes. And then we can track when volume is entering the market and if there's any changes in it. I don't know. I think there might be, because I have been noticing that Fridays seem to be inducing quite a lot of volume lately. Because when was last Friday? It was here. I mean, this week was pretty volatile to begin with. Yeah, this one's also Friday, a little pump. All right, but this is volume spikes, so I'm going to implement that. Anyway, back to Bitcoin. So the question is, okay, we have some nice setups on alts. It looks like Bitcoin wants to go higher. We look at pure statistics. Where are we going to do this from? You probably already see me say it as well in the chat. We do have this fair value gap right below us on the daily. This, let me get the right chart, actually, this one. A lot of green lines. This one right here. And you can see in the dashboard, I mean, we'll just go there. Been a while since I've used it, to be honest. I've been so busy with developing other stuff. But if you go to the fair value gap page and we select this most recent fair value gap, let me see, I'm on the 4 hour right now. Let's go in the daily. Then we'll see it pop up here. We press it. So right now it's unmitigated. And within 3 candles, so 2 more candles from now, and this is counted from the confirmation, right? So this is a confirmation. This is the first candle, second candle, third candle, and so on the daily. We can see then in the first candle, 50% of those fair value gaps that had a first step. Within 2 candles, 64, and within 3 candles, 69. I must also state here that I filtered on fair value gaps that do not have a confirmation close above this, right? So they are fair value gaps that do not close above this candle right here, like happened here, right? We put in that fair value gap here. Here we had the confirmation, and the close was not above it. So the reason why I'm doing that is because there's a significant difference in how they react. These candles, if they do not close above, like for example, here we had that confirmation close above, right? This is also fair value gap right there. But we had the confirmation candle closed way above it that wick. So this one closed above the confirmation candle. What we can see is that there's a big difference in how they act. So look at this, for example. This is for all the fair value gaps that had a confirmation close below that wick, right? If we change that and say, okay, what if it goes above that wick? Then we can see that same number drops to 39%, which is obviously a massive difference. And it makes a lot of sense, right? So basically what it's saying is that if you have that confirmation above it, which is what we have here, it takes a lot longer to fill it or tap it. As you can see here, like this is pretty much non-actionable in my opinion. So you want to steer away from these, or at least I don't think there's as much what you can do about it. Is it even worse? Yeah, no, 39%. Right, so here it's like, okay, where are you going to act on it? Not much. Interestingly enough, this is another guest use case for us. So what I can see on this bottom right chart, look at it, right? So this is how far price moves in terms of percentages before reversing, tapping. And by the way, spoiler alert, before I do, this makes sense to tap this fair value gap before we ask for the weekly highs, right? That's why I'm saying it. It's also why I'm saying I wouldn't yet touch any altcoins personally, because it does look like we're going to have to tap this fair value gap at least. But so what that other measure is saying is basically measuring, okay, how far did price go from that fair value gap before we tapped it? So we do see we're not, actually, it's not very common to tap it this fast already. It happens, but, oh, wait, I'm looking at the wrong one. Let me revamp that. So, interesting point. And this one, actually, I changed in my developing version. I don't think this metric is the best. I changed it a little bit to measure it differently. But interesting point is that what you can see, like the bigger the difference is between, the first step, fulfill, and reversal, basically what that is indicating that there's that space in between, the space in between here, are the fair value gaps that give a reaction like such, like this. If this happens, this is pretty much, that's when you see the first step is higher than the reversal or the percentage move away from the fair value gap. What you can see from that is that, there is a decent amount that has a move. Not too many, to be honest. Most of them simply don't have a move after. But could also have to do with the size, to be honest. I don't think. Uh, Either way, if you see candles, fair value gaps with a confirmation above it, you see the distance between those lines is a lot less. What that means is that they have a reaction less often. And with a reaction here, I simply mean taking out the high, right? Because as soon as you break this, you have a further displacement. That's basically what it's indicating. So what that means is that fair value gaps like this, where you do not close above it, have a higher chance of giving a reaction like this than I'm saying, by the way, I'm saying this is still not like a mega chance or anything. I actually think it's still below 50%, but this is pretty much almost 0%, right? Not zero, but very low. This is decent chance. Obviously, it also depends on the TA and a lot of other stuff. I do want to work on this a little bit more, I guess, later on. But this one has a better chance of giving a reaction if it comes there than this one, because this one had a confirmation close above. And what usually happens is what we can see from this chart, where basically the distance between the highest line and the lowest line is not that big, unless for some reason here there is an area where if you move between 5 and 10% away, then it gives a bit more of a reaction. But for example, if it would happen now, so if we would revert now, you see that it almost never happens that we have a reaction there. But in general, this is true for all fair value gaps that don't confirm, right? So fair value gaps that confirm with a higher candle close than the fair value gap candle, so this one, are less likely to give a reaction. That's how I read it, at least. So back to this one. Yeah, and if I'm being completely honest, this one also doesn't look like it has that great of a probability of giving a reaction if you look at it like this. But what is for certain is that there is a high probability of reaching this. So therefore, no longs yet, and I would definitely wait for Bitcoin to tackle this one, to at least tap it and then see what it does from there. So that's also why I say if you have now altcoins, a lot of altcoins that have decent retracements, I personally don't think I would enter it if I know that it's a high likelihood that Bitcoin has to retrace a little bit more. So, since altcoins are so weak, if Bitcoin indeed reaches it, then there is high probability altcoins will retrace a lot further. If you ever, the good thing about it, say altcoins, there's an altcoin that retraced here while Bitcoin is retracing here. If Bitcoin is showing that sign of reversal, even when the altcoin is here, there's still a great RR opportunity with a good confirmation already because Bitcoin is moving towards the highs. It's pretty much what happened 2 weeks ago on Polkadot, right? Polkadot is a great example. Let me check Polkadot. So we had Polkadot a couple weeks ago. Right now it's looking sad. I mean, the whole chart looks sad from Polkadot. Right, so this one, give me the defaults. Oops. Should not have done that. Well, let me just change that to. Oh, there it is. Never mind, it's there. Oh no. Well, I don't know why these lines aren't drawing, but whatever. So we had the weekly low right here, and we had the weekly high right here. That's why I'm saying it looks kind of similar as then, because there was really good probabilities to take out the weekly high. But we had a similar situation where Bitcoin here, where Bitcoin was, kept on here somewhere at the highs, and Polkadot just went all the way down. I mean, we can actually check that like this. Got the Bitcoin chart right on top of there. When you look at that, right? So Bitcoin stayed all the way at the top. Bitcoin actually kept on just going up. just grinded up, and alts were bleeding here, right? So Bitcoin was still very much at the top of that weekly range for the altcoin, which is kind of what's happening now, and altcoins are bleeding. Then at some point, Bitcoin started moving up towards that weekly high. And what happened is that as Bitcoin was moving up, so I'm talking about more or less this point right here, when you have some more confirmation of like, hey, we're going up. Look where Polkadot still was, right? Polkadot was still all the way at the lows, with still great probabilities of taking out weekly highs. Even here, Bitcoin took out weekly highs and Polkadot was still at the lows. So you had confirmation, more confirmation here on Bitcoin, the price would move further up after this little retracement, and it yielded a great RR even if you didn't catch the bottom. So what I'm saying is that even now, if such a thing would happen, I would personally wait for Bitcoin to go a little lower. And if altcoins are really bleeding that much, then we might have a similar situation, and we don't need to catch the bottom, because if the altcoins really bleed, like when altcoins bleed as much, when Bitcoin is staying strong, we can wait for Bitcoin to do this. And if it starts doing this, then altcoins will be here. You can enter somewhere here, miss the bottom, but also don't risk getting stopped out there at the lows, right? Because if Bitcoin doesn't do this, and if Bitcoin instead keeps on doing this, then there's no confirmation, and we will never take a trade, and you won't lose anything. So that's something I would be looking at. So the main idea for Bitcoin is that the weekly high needs to be taken out. That's a summary, but that at the moment it looks a little bit. It looks like we need to go a little bit lower first before we can do it. Let's see if we can find some other stuff to help us in this idea, or at least to find some confluence. So we have, yeah, that's pretty nice. You have the 382 right there. I love the 382. Let me just quickly this one like that. 382. This is the nearest SR flip level. Not going to be of any. If Bitcoin comes here, then alts are stopped out. So that's what I mean, right? So if Bitcoin comes all the way here, with the way altcoins are behaving right now, then it will be over. Alts, see the volume profile, a little gap here, and then a little spike there. Also around the 382. So I do like that 382. That 382 is actually a really good retrace point. I want to get its statistics on it manually. You actually want to automate that, but the 382 is a really good. It's in market structure, the way I marked it out, and this is the way I would mark it out. It is. That's actually not the way I would mark it out, to be honest. But it is one of the strongest retracement levels in impulsive moves. That I do know. So if I would pull this one with me, 236 down there. All right, but we do have this little volume spike right there, which is good. If you lose it, there's nothing here, then this golden pocket is the next stop. And let's see on the lower time frame. On the lower time frame, we have this. I was going to say demand zone, but it's already been tapped. So I don't know how strong that still is, to be honest. But what is definitely true is that we have this ranging environment. Let me clean things up. We have the fair value gap right below us. I'm actually load something up real quick while I'm talking. We have that fair value gap right below us, and we have that, we have this very compressed range, plus a lot of over leveraged people in this range as well. Price already moving down as we speak. So we have this liquidity here. How much liquidity is there really? I don't know how much is going on in this range. I don't think much, to be honest. Let me check the volume. Yeah, really low. Really low. Except for this one, which is pretty much just a sweep of the liquidity both sides. Well, actually, the high liquidity has been taken in, but here this liquidity is still taken. So kind of what I'm looking for is, yes, I do still think the weekly high needs to be taken. But it would be really nice if you can grab some liquidity here and then reverse and go back up towards that weekly high. That would be the ideal play. The only thing is that the markets are pretty aggressive at the moment. And perhaps we don't get as deep of a pullback, but I personally wouldn't long here. That's just my opinion. Why is this thing? Ah, never mind. That's why. So right now you took liquidity at this mini range high. Now we're going for the range low. So we're already actually going down. So let's see if we get those lows. Let me just put an alert there, and then let's look a little bit what I wanted to do. Ah, ho ho ho. Yeah. So this is what I want to do. Look at that. So this is not something I would long in, right? This is not something I would long in. Let me actually quickly. So this gets further confluence to our idea that lower is likely. So let me actually quickly, I'm just going to quickly post that. Further confirmation that lower for the day seems likely. All right, so I mean this is further confirmation for that idea. All right, so this is obviously very bearish, not something I would go against, right? So even though Bitcoin is more or less strong, like if the whole market is this bearish, then it's not something you want to go against. Actually, what is pretty cool is all this hours. I've been actually meaning. I know there's a member who has been paper trading hourly candles and has been doing pretty well on it. So it would be interesting to see, because I've actually been meaning to check if there is a strategy you can automate on hourly candles, because you get a lot of them. My reasoning is this: if you have, we've seen which hours are the most volatile. It's the afternoon hours, the New York hours. They're very volatile. If you just check back every half an hour at those candles, see what they're doing, and if you can have even a small scalp or something, that could potentially be interesting, especially if it's aligned with, for example, the 4 hour or the daily time frame. So we have 82.5% here, Gala with 0.3. So if I quickly go to Gala just as an experiment, Gala USDT, I have the right one, there it goes. So Gala, and I'm no scalper at all, so I wouldn't know. But if I check then Gala here, so 9.4% chance of taking out the high and 82.5% chance of taking out the low. 48 days since this current 5-minute P2 has been a thing. So, then the scalp would be. This is me just speculating, just looking at how it works. I'm no scalper. I wouldn't find an entry here, but I'm just looking for the direction. So the interesting thing will be, will it take out that low in the next half an hour? That's what I'm gonna check right now by setting an alert there, and we'll check back on that later. So the idea is that it would take out here, and honestly, every because let's see how much. That's a 0.5. Yeah, 0.7%. I don't know if that's enough, to be honest. I don't think so to really make a lot of profits there. But again, I'm no scalper. I'm just doing this as an experiment. So lower for the day seems likely. So what I would do personally is not look for any longs on the weekly, even though we know there's a lot of weeklies being printing long signals. But we are very much at the highs with the daily time frame printing a lot of bear signals. So preferably what you would see is more downside today, which also from our TA and the fair value gap analysis is what we've concluded that more downside, at least for a little bit, seems likely. So there's no need to to be in a rush to enter longs, I think personally. And maybe the better play would be to look on the daily, see which assets have a lot of potential to go down for the day. And then, once they go down, hopefully tomorrow, we can have an update and maybe target those weekly highs. Ship is holding pretty strong on the bull side, funnily enough. Uh, uh, Other than that, no retracements to be had yet. BNB slightly, but 0.2, I wouldn't do it. Yeah, so I personally wouldn't pay attention to bullish signals in here. If there's an enormous sea of red, there's no new need to look into bullish signals. So it does look. I mean, look at this. AXL 6.6% chance taking out high, 85.5% of taking out the low, of going further down, and lots of similar like statistics. Obviously, I'm a hybrid filtering. It's good to mention. So it is the more aggressive side, but it does look like that is the way it wants to go. So yeah, I wouldn't be entering any longs right now. If anything, I would be looking for shorts on alts. However, they've already moved. I might be a little bit too late. 138. Ah, that's right. We changed times. So right now I'm in UTC time zone again. Usually I like to look at 12 p.m. UTC what the price is doing. And then I would always have to stream at 1 p.m. my time. But now I understand that that no longer gives me what I'm looking for. So what I really want to do is look 1 hour or travel 1 hour in the past and then look for setups, which I'm obviously no longer going to be able to do. But that's good to know. Maybe I'll have to make my streams a little bit earlier. All right. So lower seems likely, right? The bias for the day seems like it's going to go lower. There's no rush to get into weekly longs. I expect these to retrace a lot more, potentially taking out their P1s, because you really have to take into account that Bitcoin dominance is rising, and what I said earlier, that if Bitcoin retraces more, which it looks like it will, that say it does this, keeps on going down, then alts will get taken out. Whereas we can just simply wait. Maybe here we get a structure change. You can enter here on Bitcoin. You can enter on alts down lower. So that is something to keep in mind. So I would only look for shorts and alts, but there's no entries. So there's no reason to jump in any shorts right now. Maybe 1 hour ago there was, but right now there is not. Let me check, for example, what AXL did. Yeah, also not the best entry. 382. There you go. 382, guys. I'm just looking if any of them would have given a good setup today. Nope. Straight down. No entry. Nope. Straight down. Straight down. So today no entries, but regardless, it's still good because it can give us it gives us a bias that we don't want to long yet. But this one's starting to look interesting. You're at the bottom of this range here. Interesting. But an interesting one to look at the ship was one of the Lone Rangers that is still bullish. I mean, to be honest, I would personally, it's interesting to keep an eye on. I don't think I would act on it if, like I said before, if you have a sea of red and just one or two that are green, uh, very often, if the whole market falls, obviously the ones, even that are doing well, are going to fall with it. Let's see. Oh man, IMAX with some great statistics here on the time-based thing. 154, 107. Not showing up there, so let me check what this one is. Too late. See, I should have gotten this a little while longer ago. So this one, with the time-based strategy, where we look at, how long it has been since that hour has been P1 and P2, 154 days since hour 8 have been in P1, and on the 7 days since it has been in P2. The distance statistics are not showing anything because there's not a good displacement yet. So in terms of distance, there's not really a good setup there. But if you see this, then it is a great potential entry because you don't need as much displacement to get to an entry, which means better risk to reward, right? Because imagine if you enter here, that's a very tight stop loss, and of course this would be not the best, but you can target way lower because if price goes lower. So if we, for example, put these off and we check what IMX is, we will probably see that IMX has, I don't know, like probably 90% chance of going lower. 99.2. Yeah, okay. So case in point, 99.2%. So here you can see this is actually an insane setup. It's too bad I didn't see it before. Wow. It's probably one of the best setups I've seen in terms of the time. But did Nelson get that? Let me check if Nelson got that. He might have. He pays attention to these things. No, oh, this is hybrids. No, he didn't catch it today. Because this one's crazy, right? Because we know that even though we had not much distance, we know that it's a very shitty pivot. P2 is a very shitty pivot, and IMAX is at hour zero. So you could take that, and then you could say, okay, well, we have 99% of days that go further down. So then, I mean, if you just take it conservatively speaking, let's say it goes down towards, I don't know, where 60 or 70% of days would go down towards. Let's check IMAX here. What an insane setup. IMX. Manual. So, I mean, how far would you go? All right, so let's say very conservative, -6, which is 73% of days reach that. So -6%. Here, 76% of days will reach this target. That's a 4 RR trade with very high probability, just time based, especially when the rest is bearish, right? So even now, you might not have had the confirmation in distance stats, which was shit, right? 76.5% would do a P1, P2 flip from there. But the time based stats were so powerful. And combined with that the rest of the market is just showing red, then this is a great setup. So let's see if it reaches that 76.5% is crazy. So let's see if it reaches that. But this is just a very quick, way. It's too bad I should have been an hour earlier. Then we could have caught those setups. But that's a really nice one. And we have so this is some of the best you're gonna see. 154 against 107. Like you don't see that every day. Let's check how I'm doing on time. And we have a couple more. 107 against 155. That one's also pretty epic. And this one's also pretty epic. AXS. This one's not bad either. Yeah, and see, all of these still have so much room to go. 94.9, 80, 98.7. So these you would never be able to catch with just distance statistics alone. But with these time-based statistics, which is obviously a different strategy, but in this case, you can combine them with the general market sentiment, which is down, as we saw on the multi-time frame page, then those entries become even more confident, right? So there's definitely something you want to take a look at. Let's see what was it? I don't remember which one I was looking at for. I don't know if it was Gala or GLM for the hour. All right, I can find out easily. Gala, it was Gala. Curious to see if it will reach that 1 hour low. Because honestly, if you know that this hour is one of the most volatile, and for example, you're expecting lower prices, it might make sense to look for positioning in those hours, right? That's why I want to add that to the dashboard. Oh yeah, there we go. There we go. There we go. Nice. So let it tap that fair value gap. Let me check something. There it goes. Almost for that tap. Almost for that tap. So what's happening now, obviously, with altcoins is that they are bleeding faster. We will probably see that if we go on the weekly. I don't think there's a reason right now to look for longs just yet. I think we can be really patient. So you can see, you know, 0.6, 0.5. It is bleeding a little bit deeper. I would kind of let this roll out for a bit, see if we can get some confirmation. If not, P1s will get taken out on altcoins. And in that case, there's no trade there. But if at some point Bitcoin recovers and does want to go for that high, then we can easily enter those altcoins position as well on the recovery. But there you go. First step of the fair value gap. Nice. Nice, nice. There it is. Bang. Tapped. It's officially tapped, people. It is officially tapped. So this would be an interesting area for a move back up. Because obviously you have this range here. And we're taking out that liquidity at the lows. Yeah, honestly, it's not a weird place, is it? It's not a weird place. Let's see what daily stats are saying. Wait, let me check something. Because I heard an alarm. Was it? Not Gala. Holding up quite well, actually. Yeah, I mean, this is not a weird place to take a long from, if I'm being honest. Because you do, this is the pretty much the level we mapped out at the start. I don't think I would do it yet. Let's look at daily. Still, lots of potential for further displacement down. Ta-ta-da. Wait for that thing to load. Trying to see what the other time frames are saying at the moment. If this thing will load for me. Oh, oh, there it is. Yeah. So okay. So it's still very bearish. I still would not. Also, even the hourlies. Yeah. 8 hourlies bearish. Everything's bearish. New York just started. Let's see where. I don't think there's a reason to long this just yet. Yeah, no, there isn't. Lower. We wait for lower and see from there. So far, it's going lower. This just looks like one's got lower because there's a lot of. I mean, there's so much leverage that is being entered on this move up. Let me check. Open interest. Look at this, crazy. So much extra volume. Open interest. Then here there was some initial flushing. Would it be weird to flush it out? Not really. Yeah, so far I wouldn't like the statistic just yet for a long. I would probably trace low time frame mark structure. Look at Tim to trace low time frame mark structure for us and potentially enter on the breaker structure. But for now, if everything is still saying lower, then we wait for lower, is my opinion. So we wait for lower, but it's nice to see that that fair value gap got hit that we were waiting for, right? So this tap at least has been tapped. We can actually check one other thing, and that is fair value gaps right there. Check one more thing. That's fair value gap. So this fair value gap just got tapped at the first one, and the question is, so this was after 1 day already, and the question is, if after 1 day we see a tap, how often do we also see a full-on reversal? I'd say more or less 30% of cases would give a reaction from that, or at least not fill it immediately. But so far we wait for lower. All right, New York seems like to make itself known. So, so far very nice to see what's happening, right? We obviously haven't got that weekly high yet, but we were not looking for that. We were waiting for that fair value gap to be hit, and it has now been hit. I personally don't think there is a long here to be taken just yet. We simply wait for the day to play out, for some bearishness to cool off, maybe check some low time frame mark structure if that breaks, and go from there. Let's check. What's up, Wyckoff Insider? I always doubt is it Wyckoff or Wyckoff. Good to see you, bro. Robin, monthly support with monthly close today 71,274. 71,274. Oh, that's where we bounced from. Yeah, I'm not so much a horizontals guy anymore, although they are pretty good. Oh, that is a very important level, though. Like, this is a really important level. Oh, fuck. I see what is happening. It is 31st of October. I think price is trying to close below it. Everyone is yeah, price trying to close below this level. Thank you for pointing that out. I don't know if you meant this level, but everyone is looking at this. Wow, hiccup. All right, everyone's looking at this level obviously because I don't know how true it is. I would love to gather some statistics on it, but everyone is always watching for monthly closes. For example, if the monthly would close above this, everyone would be like, "Oh, that's so bullish," you know. I personally don't think it's that much of a difference if you close below this on this day or above this. Is my hunch. I would love to gather some data on it, but I just don't think it matters that much. Anyway, so what I think, what would happen if we close below this, then everyone's saying, okay, that's so uh, bearish because we close below that monthly level, which would be a great setup to, after that, go for that weekly high or for that high for that matter, which we have not had yet. So I do think we'll close below that level, which is in line with also the data that is showing that we have to go lower, right? It's looking very bearish. I don't know if it's still looking that bearish. This one had a first step, so that's nice. We might be able to revert. Oh, but the interesting thing here is that you can see that actually it takes a lot of time for these fair value gaps. If they get tapped, there is actually quite some distance or some time in between how long it takes to reverse them and how long it takes to tap them. So, for example, here we see that after, let's say, we had a first tap now on the first day, 50% of fair value gap C first tap within that first day, which is what we just had. Only 6% reverses in the same day, right? So I'm talking about the candles. Ooh, where did my fair value gap go? And what is a reversal? A reversal means that the daily closes below. Let me show you where this thing loads. Is if the daily closes below this one right here. So I take the low of the candle itself. It's more confirmation, in my opinion, because you see quite often that price does something like this and then just does that and then goes up. Hence, I take the close as the reversal. So a daily close below this would mean a reversal. All right. Now, if that means a reversal, then what we can see here is that after one day, today it's very unlikely to happen. 6.1% of the time that would happen today. So this kind of gives us an idea that, okay, we have to go lower, but we probably won't go close lower than this. That would be a 6% occurrence. Not a lot. And that's not even filtered for the size of the fair value gap, because this fair value gap is pretty decent, I would say. So it doesn't seem very likely to go lower than that. Doesn't seem very likely to go higher than this today, because we wanna make everyone believe that this is a very bearish close. I can already see the post tomorrow or tonight. Probably within a couple of hours, we will see posts on Twitter saying, "Oh, if price closes like this in a couple of hours, the monthly close will have closed below this level, right?" Similarly, if the opposite happens and we close above it, you will probably see, "Oh, this is so bullish." Again, I don't think it really matters that much on the short term. Let me just get these session things out right there. So an interesting thing would be to kind of close today somewhere in between here in this zone right here, right? Where you don't go below this level and you don't close above that level. So that's something I would look at. So if you can close somewhere around here and then go back up towards the weekly high, that does not seem like an implausible scenario to me at all. So closing above this, I mean, if you can close above it and obviously you do something like this, then I do think the weekly highs are next without closing there. But let's see. I do think because this one is backed by data, right? We've seen in the data it doesn't happen much that we actually do that. Even first day reversal or full fails is 21.8%. So this one would be 21.8% to just wick, wick. And this one to close below would be 6%, right? So yeah, let's say today price will close somewhere in between here. 69.7K and 71.4K price will close. So that's what we're looking for today. And if we get that, then we can get some bottoming formation, since we know that the Fridays put in a lot of volume. If we want to see that weekly high hit, then you kind of want to see something like this going up towards there. So this is what we're waiting for. Study Sergio data. Yeah, man. Sergio's computer cannot handle the data. Honestly, it cannot. I need a new computer. I need a new computer, man. I have a 2019 MacBook and I just cannot handle it anymore. It's blowing up. I will have to buy myself like an M1. There we go. Gala crossing the low. Nice. That's a 1 hour. That's a 1 hour power for you over there, right? So I honestly think you could make a scalp strategy out of it. The only reason I thought about it is because I saw someone, I don't know if you're watching right now, Blindy, that's using the 1 hour data, which is pretty funny. But I have to be honest, we just tapped it just after the hourly close. Let's be completely fair. Still took out the low, which often happens, right? If you have low probability low, often you take it out after the candle close in the next candle. So that happens. Marks are dumping. Hooray! We saw it coming. And again, the beauty of this is if we have this data and we know that prices are going to go lower likely for the day, even when the weekly is bullish, we don't have to. It's what I said at the start. We don't have to rush into anything because it looks like we're going to go lower. If we're going to go lower, then also going to bleed even more because Bitcoin dominance is falling. So if that's going to happen, like we really don't have to rush into anything. It is about time. And once again, if we do go a lot lower and we take out the low, like the weekly P1 is very unlikely to be taken out. Just from statistics, that's just the way it is. It can happen, yes, but it would be a 1 out of 11, 1 out of 12 weeks event. So that's most likely not going to happen. But if we do go lower quite a bit and also keep dumping, then also the idea will invalidate itself without us having to jump the gun. Like my friend Wyckoff Insider always says, we react, we do not predict, right? And I fully agree with that. So right now we're just reacting, waiting for this thing to go lower to dump. And and we still see there's still plenty. So we can just, keep looking at this. As long as this is so much strong there, it's not something I would go against personally. So, lower it is, and indeed, lower we are getting. So, lower, an amazing one that's probably playing out right now is that IMX play that we looked at earlier. I mean, that is a crazy play. Look at that. It's already so far. Look at that. Beautiful. Look at that meltdown, right? How nice do you want it? All right. IMX. Too bad we were too late on that one, but this one was just this would arguably be one of my favorite setups I have seen in the dashboard so far because everything came together. It's a time-based setup, but with confluence of other time frames showing bearish signals on the distance stats, right? So this one is epic. I am thinking actually about automating. I'm thinking I want to do it. I want to automate. Sorry, I would like to hear your thoughts on it, if it would be useful to you or not. What I'm thinking about doing, for example, this one I missed because, I have plenty of things to do, this IMX setup, and I don't always have time. What would be really cool is what I was thinking. I think I could automate it so that, for example, every day at 12 p.m. UTC, the best setups in terms of time-based, and these will be automatically sent towards the Discord channel, right? So that you see, for example, IMAX, this time-based setup, 146 days since P1 and 150 days since P2, and that you get just a list in the Discord channel automated where it just shows you that for, so every day, 12 p.m., you could do the same for the weekly, every Thursday or something. You could do the same for the 4 hour even. So I'm thinking about doing that. I wonder what you guys think of it. So once again, this target right here at the lows is simply because I looked at how far the days usually go down, which is a lot more. And this, so at this point is, let me write that out. 76% of bearish days go down this low. Right, so 76% of bearish days would get to that point. So it's a pretty reasonable target for at least today, right? This is obviously for when you want to take a position and then fuck off after today and not stay in that position for longer. So I mean, it is what it is, guys. So far, things are playing out nicely. I'm expecting that indeed the weeklies might take out some P1s, which is when, once again, there's no hurry, right? The rule of thumb is that if Bitcoin is strong and alts are weak and Bitcoin is towards the highs and alts have already retraced lower, then you don't want I would be careful with altcoins, especially when you're expecting lower. So the daily time frame was saying lower, so lower it is, and then you don't want to jump into it too much. How do you find the target level for IMX and percent of time it goes that low? So all I did was go to the distance statistics, go to the daily, so I just checked IMX. So we found that set up earlier. We were a little bit too late, full disclosure, but if I would have been earlier, I would have found that set up as well. I can promise you that. Because the statistics were exactly the same. So all I did was like I said, okay, well, if you enter here, then what I said was, okay, I'm just going to see how far those bearish days usually go. It's 73%. And then I did negative 6%. So basically what I'm saying here, so this is on manual input mode, right? That's manual here and manual here. Basically what I'm saying here is that how often does price bearish day go down negative 6% on IMX? And then it says 73.9%. So then I know, okay, if you have a bearish day, 73.9% would go down that low. Therefore, so 73.9%, so 74% of days would go down this low of bearish days, right? If we are bearish, obviously there's always the chance, this is the assumption that the day will be bearish, but it looks like it will. This could also happen. And then, you also have you just have high probability of further displacement. What we're basically saying here is, well, if the daily high holds, how far would we usually go? And 76% of days would go down that far. So that's how I looked at it. I just manually checked that. And the reason I did that is because there is so little displacement here yet, because it was that time-based setup. It's a nice bounce so far, though. Let's see, because it's like I'm saying, this is an area that I would very much be willing, because I do still think we need to go for the weekly high, but I'm hesitant to do it when everything looks pretty bearish. But I think this monthly close is very important, not for what the price will do after, but because everyone, all of retail will be looking at it and will be attaching a lot of importance to it. So I think it's a monthly close. Some fuckery is to be expected. So now we have this 1 hour fair value gap right here. Which will definitely confirm. I need stats on that. I have the stats, just not in the online version. So these ones usually confirm because they're pretty big. What that means is that it's unlikely that this next candle will close above here. But it's definitely something, I'm not saying it cannot bounce from it towards, because I still expect those weekly lows to be hit, right? So this is definitely something, an area I would be looking at. In terms of confirmation, we have to look at Trader Tim in the chat, who's the pro at confirmations. Let's see if Trader Tim has said anything about confirmations. Not yet. Yeah, I would personally just be hesitant to do it right now. Probably wait at least to see how this hourly candle closes. And my guess is that it's going to close somewhat like, let's see, do something like this on the lower time frames, obviously. So it would probably wick a little bit higher and then close somewhere here. That's what I think, right? So there's no reason to jump in. And that's because of what I know from fair value gaps, how they form. Big fair value gaps like this have a high chance of confirming. And if it confirms, that means that price will not go within this hourly candle up to this level. That means it's confirmed. I cannot tell you the exact stats. I could if I would go on my local thing, but when I'm streaming, it's like Wyckoff Trader said, Wyckoff Insider, my machine dies. All right, so I think this hour I would be very shocked to make it to this level. I don't think that will happen. And once again, I still think there's a reasonable chance we'll close somewhere in between here. It is very unlikely that we'll close below here. So it's even not that likely to make this level, to be honest. 80% of the time we wouldn't today. All right. So no position. We have now beautifully seen lower as we were looking for at the start of the stream. So nice. The fair value gap statistics were saying it. The various signals were saying it. Now we are seeing lower, and we're at the same time also still expecting highs. But we also know that if it were to happen, I would expect it to happen today. Tomorrow, maybe something like this, would be nice, where you see a reclaim tomorrow of that level around Asia Open. I don't know. All right, so or at least I don't know. I would react to that as it happens. For now, I would be inclined to at least wait out this candle and then see from there. Yeah, one more thing I wanted to say before I close off. I've done a lot of backtesting towards market sessions because, one of the most beautiful things I found about statistics is, yes, you can find things that work very well, but you can also find, one of the underappreciated things of it is that you find a lot of things that don't work that a lot of people think do work. So, one of the things that I investigated in the last 2 weeks, and I investigated this in the last 2 weeks. Like, I mean, I spent proper hours on this. I've really done some, quite intuitive or inventive data transformations to try to look for patterns. What people often say is, that, for example, if you have an Asia pump, London consolidation, New York often takes out the low, something like that, like this, or that Asia or New York pumps post takes out the high and then post reverses. I can tell you now, after 2 weeks of data exploration, that sessions don't seem related to each other. It doesn't seem like it matters what London does that will impact what New York does. It doesn't seem that it matters what Asia does in terms of what New York does. I have thoroughly tested a lot of these situations. What if Asia closes far above post session and London consolidates? What happened to New York, for example? I've tested these things. The truth is, it's pretty much 50-50, right? If you have something like this, then there's pretty much a 30% chance to do this, there's a 30% chance to do this, and there's a 30% chance to do this. It is always a 30% chance. The best I could do is some slight differences, even if I looked at, if this happens, what are the odds for the next 3 sessions or something? What's going to happen in this time range here? The average is more or less this, right? The average is more or less this. The best you can do if you do a lot of data transformations is that, there is maybe a tendency to close 0.9% higher than average, 0.9%, which is completely insignificant, very statistically insignificant. So long story short, obviously it would have been very nice to find some things that would have given us insights into how one session affects the other. I've done a lot of testing, and I simply think there's no causal relationship there, and it makes a lot of sense because in financial markets, it's best to assume independence of sequential events, and that is to say, what a lot of people often mistake thinking, especially on the lower time frames, is that if A happens right now, then in the next candle B often happens, right? So there's an assumption of causality you're making there, right? That the first event has effect on the second event. In reality, more often than not, there is no relation in these things, which is counterintuitive because you always think that one thing has to lead to the next because that's trading. That's not so much it. The patterns we're looking for are not necessarily a causal effect. Like, for example, P1, P2, there's no causal relationship there. You're just looking at what the distance is. And I found in my research so far, maybe I missed something, but there's only, from the research I've done, is that there is no correlation between sessions. Asia doesn't care what post session did. London doesn't care what Asia session did. New York doesn't care what London session did. Yes, New York takes a lot of highs and lows from the previous session from London. That's something interesting. But it's not like it's going to behave in a certain way if London or Asia behaved in a certain way as well. And, I just think this is what I say. So obviously you have a lot of people, and this is the beauty about gathering data, because you will hear so many people say, yeah, okay, I'm not saying this particular, but a lot of people say, yeah, Asia pump, London consolidation is going down. This is one of the patterns I've tested the most. It's really 50% chance, more or less. Maybe it's also quite complicated to test it, I must admit. Maybe there's something I missed. Obviously, a very real possibility. But from what I've seen so far, in the ways I have tested it, there's not really any causal relationship. There's just, sometimes it goes up and sometimes it goes down. It's that simple. I tested that for only Bitcoin. Yeah, I did test it. And Solana. Solana was the same thing. So Solana and Bitcoin. Do you think it's going to be more prevalent on altcoins? Because I find that usually Bitcoin is one of the better assets in terms of statistical significance. But honestly, my conclusion also, intuitively, it makes a lot of sense because patterns usually evolve over like intraday sessions like that. The dependency between sessions, it makes more sense that it's not there than that it is there. See what's happening here. Yeah, not much yet. But yes, Bitcoin only. I tested it, but there is really nothing to be found. Really nothing to be found. And if it's not on Bitcoin, then I wouldn't. I honestly wouldn't see why it would be on other assets. Maybe in other markets, perhaps. Um, but other crypto assets, I don't think so. Because if anything, the sessions are mostly trading Bitcoin, I assume, like the actual exchanges. Because the assumption is logical, right? The assumption is, well, if New York leaves behind liquidity, then maybe Asia wants to take it. But in the end, it's just because, for example, here, if you measure that like New York here, New York left liquidity here, and then here it gets taken by New York, right? And I think what people do is if they see this, they're like, well, New York took liquidity in New York, there's a pattern there. But here it didn't take it. Here it didn't take it, right? So if you add up all these things, you see that, yeah, okay, sometimes it takes it, sometimes it doesn't take it. Man, I ran a shit ton of statistics. I have looked at, for example, I looked at just how often does each session take its other sessions low. So I, for example, checked that how often does New York take the low of another New York session? How often does Asia take the low of a New York session? Stuff like that. And there was nothing to be found there. And see, there people with the whole training system around this, yes, maybe there's a difference with Forex and indices, but that's a different game. It might be that Forex and indices is a different game. I mean, which we're going to next. I don't know these traders, so I don't know how legit they are. It could be, at least for Bitcoin, I haven't found any patterns. At least for Bitcoin, I haven't found any patterns. But that is to say, is that I have to admit that it's very difficult to gather reliable statistics in a way. I found some ways that are pretty reliable, but there's so many different things going on, right? For example, if you have a Asia session here that pumps and then followed by a London thing here, well, you also came off like a big uptrend here. So this Asia pump followed by a London consolidation is obviously going to be different than if you have this Asia pump, London consolidation, and maybe then the probability increase to go down lower, right? That actually makes a lot of sense. But it's very difficult to account for all these different kinds of scenarios because there's a lot of different scenarios. Another scenario would be that you crash down during the post session. Doesn't happen a lot, but for the sake of argument. And then Asia pumps up, and then yes, you had a pump, but you just reversed the move previously, right? So you have a lot of different scenarios, and it's very difficult to statistically account for those differences. But I've tried it as best I can, and just also what I found with the statistics is the more complicated you make it, the less effective it will be. So, for example, if you try to account for all those scenarios, you want to have as little subjective interpretation as possible. So, for example, data around P1 and P2, it's objective. There's a cold hard truth. It's either the high or it isn't. It's either the low or it isn't. It either came first or second. The distance is also absolute, right? There's no arguing with that. The more subjectivity and the more room for interpretation you have, which is what you have with these sessions, because the context really matters. It is very, very, very difficult to capture the context in an extensive way where you have all the different scenarios possible. It's almost impossible, right? So I've tried it I didn't try to capture all the different scenarios. I did try to say, okay, what if Asia has a pump and closes well above the different post session, right? But, it could still be that, for example, it did something like this. Also in Compass. But, I really did a lot of tests, and the differences in what price did after was just really minimal. It seems pretty random. Did you also check if a strong pivot point is a session high or low? Mm, What do you mean? Like on the daily, weekly? We have it in the dashboard actually somewhere. Um, so we have a couple of things. We have like on the weekly, you can check. Here you see which weekly pivots put in the most, which sessions put in the most weekly pivots. So Asia most often puts in the first weekly pivot, funnily enough. New York the second. And you also have on the daily that we can look at which sessions put in. And I'm going to put in a session time frame. So then we're going to see in which times during sessions pivots are put in. Right now, we do know which sessions are putting in pivots and which aren't. London is not putting in pivots. New York is very strong to put in pivots, and Asia as well. Post not so much. Decent, actually. But the Aztec with strong pivot point session high or low. So in that sense, yes. In other senses, no. To finish my remarks on people having trading strategies on those things I mentioned, either they have find out a way with qualitative testing probably to map out the how do you say it, the different contexts, right? Which is possible. There's different contexts. But I also know there is a lot of people who use systems that simply this is if they're legit traders, there must be a way for it. Maybe it's forex, maybe it's the context they figured out. In the grand scheme of things, not taking into account content and just taking, you're saying Asia pumped over had a big pump and London consolidates. If you just take that in the grand scheme of things, I'm convinced there is really no relationship with the other things. But what I've also found, like what I found in my data journey, is that there is a lot of, and this is especially true not for the traders, but the course sellers, so the people who are making money with courses, not with trading, is that they advocate for strategies that do not work, right? So, for example, you also have people that have the whole trading strategy based on the Monday range, where they say, okay, if we have a Monday low here and a Monday high here, and then we take out the Monday high, then we short towards the Monday low, right? This is a trading strategy that's been being taught a lot. And then, you just go to the data and you see, okay, you can do that if you want. Let me go to Bitcoin as the main example. You can do that, but you see that in the last 30 weeks, 86% of weekly P1s were on Monday. So you're basically counting on, people who do that are literally counting on a 14% probability. And 14% probability is being conservative because, this is just the ones, because it could also be that, that it then takes it out again and goes down lower after that, right? So then say like this will work out 10% of the time. And they have the whole system built around it, right? So I found a lot that if you gather data, that a lot of these systems turn out to be bullshit. I don't know if this is maybe in New York and post session it will, or in forex and stuff will work. I actually I hope to get there this year, maybe early next year. But a lot of these people are advocating things that do not work, and this is what I found out with statistics, which is also why statistics is valuable, not just to find out what works, but also what does not work, right? The course traders. Yeah, they're not even traders. All right, guys, I think I'm gonna close it off here. It's 1.5 hours. That's long enough. So, still looking for weekly highs, but we do need to have some bottom information here and some upside movement tomorrow, maybe towards New York session. If not, it could be that we leave that high. I'm not taking it out of account because obviously the unusual situation is that we're really close to all-time highs, which obviously doesn't happen a lot. So, leaving this high is something I definitely foresee as a possibility for this week. Statistically, it's more likely to take it, but at an all-time high, it's not weird. So you want to see bottom information somewhere like here. I do expect to close in between this area because this shows close below here is very unlikely data-wise. This is just a psychological level, but let's see if we can reclaim this. Then this would also not be a bad place to look for longs and also look for longs on altcoins. But for now, lower looks likely. So thank you guys for watching. Once again, I appreciate it. Thank you for the engagement. And I will see you in the chat. Any questions, let me know. And I will see you on the next stream. All right, guys, have a good one.